Hi everyone, Jodi from Northwest Accountancy. Just wanted to give you a quick video on understanding financial statements using Xero. So what I'll be doing is over the next few minutes, going through some of the reports you can run in Xero as well as how to read those reports. I'll be using the demo report, and Demo Company is one of those reports, one of those programs you can use that everybody can use. And what Demo Company is it's the training version of Xero. So we use the Demo Company to play, to teach, to learn new things about Xero that they've implemented and shown already. So when we run reports, it's not nothing reports. So this is what I'm going to use for you today. So first of all, we'll go through understanding financial statements. So financial statements are the reports that you run in business to use to make decisions about your business. So in Xero, we've got reports you can access from the reports screen. So the two main ones that I use are the balance sheet and the profit and loss. And there's also the cash summary report as well, which is a unique report just for Xero. We're going to go through the balance sheet report first. Your balance sheet is a snapshot in time, a point in time. So the report that comes up automatically is for the month end. So today's date being the 23rd of March, it comes up automatically being the 31st of March. So if you want to go backwards in time, which is from the drop down, and most often we go back to the last month end or the last year end, which was June 2017. We're going to look at February 2018 and update that report. Your balance sheet report, like I said, is a snapshot in time. So as of the 28th is assets, and it shows liabilities and it shows equity. So your assets are the things in your business that you own. So you own your assets. You own the money that's in your bank account. You own the money that's showing in your accounts receivable. So those are the invoices that you also own your fixed assets. So the fixed assets on this balance sheet are your office equipment, but your business might have plant and equipment, motor vehicles, land and buildings, as well as office equipment, either all or some of those. So having your assets showing on the balance sheet, correct value. So looking at your bank accounts, this one here has a minus amount and this one has a positive amount. So your minus bank account probably isn't right unless you've got an overdraft. So the check is to go back to your bank statement that you received from you. The balance is on your bank statement is the same as what's on your balance sheet. So that's your check to make sure that your balance sheet is right. And if your bank account balances aren't right, then there's no point relying on the rest of the reports that you're running, because if all of the information's not in Xero, then you're not information in there. The next asset that's on this report is your accounts receivable. So there's a lot of different words for accounts receivable. So there's so much jargon in accounting that there's a lot of words for the same thing. So accounts receivable is also known as receivables and accounts receivable. You can run a listing report of your accounts receivable, and this report in Xero is called your aged receivables report. So there's that mismatch of terms. So it's important to know is the same as what's on your aged receivables report. So when we run an aged receivables report, we'd see a balance of $14,049. And what I'll do is I'll just duplicate this screen and show you the aged receivables report. There's the aged receivables report there. And that aged receivables report should give the same figure on your balance sheet should be the same figure as what your aged receivables report shows. So your $14,049 is what your aged receivables says, and on your balance sheet, $14,049. So you're double checking that the figures on your accounts receivable or aged receivables list are the same as back to the aged receivables report. If somebody's paid you that amount, then it's important to check that and follow it up. So not just checking that the totals match, but checking that those names on that receivables list and those amounts are correct is also important. Other assets, so we've talked about a depreciation report built into the program, so you can run your depreciation report from the report section, and it will show you a list of what that what those fixed assets are. So if you're not using that functionality, I do recommend it, and that's using the accounts and then the fixed assets section to list your fixed assets. So your assets are the things that you own in the business. So here you own the assets, the accounts receivables, the money that's due into you, you own the fixed assets. So that's one part of the balance sheet. The next part of your balance sheet is your liabilities. So your liabilities further down the screen are the things that you owe out to other people, liabilities. So the liabilities are the things that you owe to other people, and we've got them broken up into current liabilities, so the ones that are due in the short term, and your non-current liabilities, which are the ones that are due in the long term. So there's no current liabilities on the term loans, so any financing that you have done, so bank loans for purchasing motor vehicles or land or equipment, And your current liabilities are normally your day-to-day bills, so accounts payable or trade creditors list is what, or trade creditors, and your GST and PAYG holding. On this report here, we've got your 5 is what you owe in bills, and this will show up where you do your billing through Xero. You enter your bills through Xero, and this report that you get is under reports and then aged payable. So this report shows you a list of everything that you owe to other people. We'll change that date back to February again and update. And then your listing for aged payables is 4,575. That should match what your balance sheet says, 4,575. So yet again, it's important to make sure that your listing is correct properly. We also have your GST and the PAYG withholdings payable, which is the tax you withhold on wages from your employees. The historical adjustment account there is a red flag for me. Red flag. We shouldn't. So it means that something's been put into the conversion balance that hasn't been balanced properly. Normally it's to do with the training demo company have just put in opening balances for the bank account and not for the rest of the balance sheet. Call us and we'll get you sorted out. So those are the two parts of the balance sheet that we've got so far. So we've got your assets and we've got your liabilities. So when we're talking about our balance sheet, there's your liabilities, which you owe, and then your equity, which is the balance. So if we add up all of the assets, so it's $23,000 there, and we take off the liabilities, what we owe to other people, it comes out with a negative $1,052. So that's the first way we explain equity. Equity is the result of our assets minus our liability, and that's where our equity is. Another way to explain the equity is that it's the result of all of businesses 1 year old, like this training video is, then the $10,052 will be the loss on your profit and loss statement for the year. If your business is 3 or 4 years old, every single profit or loss year that you run adds up and accumulates. In this one, we've got a current year earnings. If we had a file that's a little bit older, we'd have a current year earnings and we'd also have a retained earnings here. This is also where your share capital sits in the equity section as well. So this is your balance sheet made up of 3 things: your assets, your liabilities, and your equity basis. So probably once a month, just to make sure that your balances as of a particular date look reasonable. If they look reasonable, then you've got a better chance that the rest of the reports you're running look okay. So that's the first report I look at. The second one is the profit and loss statement, and then profit and loss. Your profit and loss statement shows your income and your expenses over a period of time. So this default that comes through is the current and previous 3 months. So we've got March being the current month, February, January, December, and year-to-date. So year-to-date going back to from the 1st of July through to the 30th of June. So this particular report, year-to-date figures, run from the 1st of July through to the end of March, even though we haven't finished the month of March. So we've got sales each month that we can check. We've got operating expenses. So each of those expenses have a name associated with it. And when you do your data entry, you'll code certain expenses to those codes or account codes. And it then generates this profit or loss report for your business and looking at totals. So the business has made a year-to-date sales or income, total revenue, all the same thing, of $45,000. We've spent out of that $763 on purchases, which I can't tell you what they are because it just says purchases. So a gross profit of 40 buys and sells goods. So you buy a book for $10 and then you sell it for $25. The $10 of the book will be in purchases, and the $25 that you sell the book for would be in sales. So then you would have a gross profit left over. The gross profit is the money that you've made after business. So your gross profit is really important. It needs to be able to cover all of your operating expenses for the business. Now, just a quick look at this profit and loss. Our sales for year to date is $45,000, and our operating expenses for the year to date in more money than what they're bringing in. This is not in a happy spot at the moment. So our sales minus our cost of sales minus our operating expenses gives us an operating profit of $16,399. Add on a bit of it, a bottom line figure of $16,302 as a loss. A loss is not good for a business. You need to make money in a business, not lose money. So this particular demo company, not a real company, it's just a fictional company, has made a loss of $16,000 for the year. So as an advisor, I would recommend to look at reducing those costs and look at how we can boost you. How do you increase your income and how do you reduce your costs and still give a good service to your business so that more customers can come. So your profit and loss report is really, really handy report to see how your business is tracking over the year. You can do a whole load of formats in Xero, so we can have a look at date, we can compare periods, we can show date ranges. It's too much to go in through today's course. So what I would advise you to do is just play with all of those buttons and see what they do. It's really interesting how the reports are set up and shown. All the same numbers, it's just showing the different reports where they come month by month. As you can see the trends of the business. So December for some reason was $4,000 in sales, and then January 17,000, and February 13,000, March year to date or month to date is 9,000. So you can track the trends of the business over time and adjust your costs accordingly. So that's the profit and loss statement. The other, your cash report can be quite different to the profit and loss report. So your profit and loss report is based on an accruals basis, and your cash report is based on a cash basis. Just change this one back to February as well. An accruals basis means that you're working on the paper system. So for every invoice you put into Xero and every bill that you put into Xero, it will show up on the profit and loss report, regardless of whether you paid it or not. Whereas the cash summary reports only those things that have physically months ago. It will show on the profit and loss 3 months ago, but it will show on the cash summary this month. So it's the timing difference. Let's have a look at the cash summary. So our sales for the month of February was 8,800, which is totally different to the 17,000. We've received cash of another smaller amount. So our debtors, or our money that's owed to us, has increased over that period of time. Our expenses, our operating expenses were $13,000. So overall, we've lost $4,000 for the month out of our bank account. This report also shows where you've spent money on fees. So it gives you a net cash movement figure. So that's an important one for business owners, where you see where your money's going, whether it's a reduction in your bank balance over the month or an increase in your bank balance over the month. So we've got an opening balance, your net cash movement, which is this figure here, is your closing balance. Hopefully, to look at your Xero reports. So the 3 reports that I ran through are all sitting in the reports menu bar. So we've got your balance sheet, your profit and loss, and your cash summary. And I just want you to have a look in your own business, look at those reports and see if they through people's files, their Xero files. So check to see if those numbers are reasonable. If they're not reasonable, then there's no point running the reports to rely on them. You need to make sure that they're reasonable. And then at the end of financial year, we check them to make sure that they're truly correct. We do ask you to look at your fixed asset report to make sure that all of the assets that you have are on that fixed asset report. I'd like to thank you very much for watching, and if you've got any feedback, let us know. And feel free to watch this video over again and share it if you think that anybody can learn a bit about Xero and understanding financial statements. Thanks for watching. Bye.